Welcome to the second update on our India Top 30 live portfolio. As Sensex and Nifty moved past 40,000 and 12,000 for the second time, there is joy in the market all around. As these joyous movements continue, there will be a curiosity on how our portfolio has performed. This is a portfolio that we shared on 25th of October when we started doing this activity. And the portfolio is looking like this now. You can see stocks that are marked green have gone up from the previous reporting, and those that are marked red have gone down. Where there were around 10 stocks having negative returns on October, now we have only 7 in the negative space. And there was big difference from the gains that the stocks gave in the last 2 weeks. HDFC AMC, which was at 49% gain when we listed the portfolio, has now moved up to 64%, 15% returns in the last 2 weeks from this stock alone. And many in this portfolio, which had 10 to 20% returns, have moved to 30% now. The beauty of this automated portfolio is that it will take out losing stocks and replace them with new entries. In that, we have 4 exits last week. Out of the 4 exits, you can see here, the exits happened with small losses, and one stock gave us a small gain when it moved out. When stocks go out, that space gets filled with new entries. We had 4 new stocks coming into the portfolio: Tube Investments, Orient Electric, Whirlpool India, and Inox Leisure replaced the existing stocks that moved out. And when new stocks that come in start performing well, the negative stock list goes down. In our portfolio, where we had 7 stocks in negative, one that came in now is positive, and that brings down the negative stock list from 7 to 6. So out of 30 stocks we hold, 24 are positive and 6 is negative today. It is still very early stage for the next bull market to begin in India, though we will not always have all these stocks positive in any portfolio. It's generally bound to be having some negative stocks on a regular basis. So as the days pass, what will happen is these big gains from leaders will ensure that all the losses that come from smaller exits will be taken care of, and also help the portfolio have very good returns in the long run. Coming to performance, last week, almost all of the laggards in our stock market started moving up. Stocks like Z Telefilms, DHFL, Yes Bank, Tata Motors kind of stocks, which have a lot of negative news surrounding their businesses, started moving up. Why that happened? When people start looking for investment and good stocks are highly priced, they go searching for cheaper ones. The cheaper ones go there because of reasons, and people just get carried away by the price and they start buying. That is why these things happen. And when this happens, what it shows is bullishness is slowly creeping into the market, and this is a good sign. When it starts building up, good stocks will start to have more returns. That's what happened on Friday. Buoyancy returned in favor of leaders. That helped us gain an edge in the market. Where NSE 500 had a negative return of 0.18% last week, our India Top 30 portfolio was up 0.21%, having a total gain of 0.39%. That is advantage of 0.39% against the index in the last week alone. If we had invested 1 lakh into the portfolio when we listed it out on October 25th, today the value of the investment is 1,02,133, giving a total gain of 2.13% in just 2 weeks. It does not mean that we will have the same performance week after week, and 2.13 multiplied into 26, that is 2 weeks is 1 fortnight. So we will have 26 fortnights in a year. So 2.13 into 26 will be 52% return from the portfolio. No, it is not like that. There is no guarantee that same percentage returns will repeat. We will also have or go through ups and downs as we travel through the days in the market. While we will continue to outperform the index just because we have the best of India's businesses in our portfolio. You would be interested to have continuous updates on the changes that is happening in the portfolio, because that will help you churn your portfolio and help you be invested in the best stocks of the country and get higher returns on your investments. So Please subscribe and don't forget to click the bell icon down there. Coming to the stock of the week, this week we will discuss on Brigade Enterprises. Brigade has the 7th top in sales among its peer group. That is, among the group of stocks that are in their business space, Brigade lists at 7th top. On the profit leadership, Brigade is one notch up, with holding the 6th place on the profits that it makes against the industry group. The industry group this stock belongs to is Construction and Contractors Industry Group, which has about 43 stocks listed in the industry group. Though Brigade is one of the good quality builders in our country. Those of you who are staying in Brigade property will vouch for what I'm saying. And guys, it is time for you to buy this stock because you know the quality of the product, and this stock is one of the best stock among the 9 listed companies in real estate space today. For September quarter to trailing 12-month sales growth, Brigade registered 25% growth in sales. That is, September 2019 compared to September 2018 sales, company has had 25% higher sales, and profit grew at 15%. Profit is kind of shrinking as margins are getting impacted due to inventory buildup, which is almost spread across all the companies in this space. This is happening because of the economic slowdown. Now there is a relief coming through by the government package that was announced a couple of days back for the real estate industry's revival by giving around 25,000 crores of support by the government. Brigade gave bonus of 1:2 shares for its shareholders. This is going to impact its earnings on the balance sheet, as the expanded capital needs to be serviced with higher profit growth, else it will show a decline on the earnings. For Brigade, even after it showed a 50% profit growth for September quarter, earnings per share was flat because capital expanded by 33%. All the 50% profit gain that they made got absorbed in this new capital. This is going to be a short-term mismatch. It will take 4 quarters for any company that announces bonus to settle down. And out of that, 1 quarter is already over for Brigade. If it stays strong for another 3 quarters, we will see huge potential in the next year, but that should stay. We don't know as of now what is going to happen. Sales in the real estate sector as a whole in our country has shown good growth in the current year. A report was published about a couple of days back, which showed 150% growth against last financial year on the real estate sector. And all this additional growth has been distributed between the 9 listed companies in our country. Brigade is one. So this should augur well for the company and its stock price. Coming to the ranking, on the stock price, Brigade ranks at 80.11. What this means is this company is above 80% of all other companies that is listed in our country or available in our country. Generally, if we invest into a company that is in the top 20% of the whole economy's stockpile, we generally will have high returns coming up. We will ideally beat the index. On the profit rank, Brigade ranks at 31.23. This is actually pathetic. We have explained the reason for the lower position. If not for bonus, profit rank would have been top the tables. When this stock came into the portfolio, that was before the bonus came into its balance sheet, its profit growth rank was above 80. On the return on equity, it ranks at 85, which is very good. Then this actually shows the quality that they're delivering on their projects. So that what it means is they are making more profits on the capital that they have employed into the business. On fund ownership, again, it is showing 85. Rank is at 85. Mutual funds have been continuous buyers on the company's stock. In September month alone, they have increased their exposure by 35% in the company. Brigade's market cap is around 4,350 crores today, which will not give much space for a lot of mutual funds to buy and hold the stock. And that is why there are only 23 schemes in our country out of 700 that are invested into the stock. There is 53% of the company's stock that is available in public domain, out of which mutual funds have already invested 14%. Foreign portfolio investors hold 13%. If you take a 27%, there is only 26% available in the market to change hands. If the demand picks up, because as the sales is growing up, industry is reviving, profit is good in the company, and the mutual funds or even foreign portfolio investors decide to buy more, supply has to come only from the individual investors, and that will put a huge stress on the supply. And this is actually good for the stock price movement, which is already showing up in its chart. As the price is climbing up, chart is getting stronger and stronger, telling us that this stock will go up even further. On the industry rank, again, this number is not good at 50. This has been due to the problems that the sector is having due to the economic slowdown that is there in our country in the last 2 years. Crisis at NBFCs, who have been the primary source of funds for home buyers, where NBFCs have now kind of totally dried up, or they are not. Bad NBFCs don't have funds to lend anymore. So only good quality NBFCs are getting money. There are only a handful of them now. Of course, there is a lot of revival that has been happening. Looks like it will get resolved soon and there will be a tick up. Coming to the 1 year target of the stock, in 1 year for the stock based on its profit growth, the 15% that we have seen, just keeping that number going forward, and the PE range that the stock has, it is having a high PE of around 25. We're presently trading at around 17 plus. The stock should be reaching 250 to 330 levels. And this, it has to make it quickly. If not, mutual funds will start selling the stock and it will also move out of our portfolio. So coming to comments, we had a few calls after we published the portfolio asking us if 1 or 2 stocks from the portfolio can be taken for investment. We would not recommend it because as a portfolio, if there is an abnormal price move in 1 or 2 stocks, it will not impact the portfolio as a whole. Whereas if a single stock is taken and that stock has some adverse moves, it can be either up or down. The account will have erratic movements, and that will not be good for a long-term investment because it shakes the confidence of the person who is holding the stock or a portfolio. Unless one has a commitment to stay put because of his or her knowledge about the industry or the company, holding a diversified portfolio is always good to have better returns, at least peace of mind. Would you have any queries on the discussions we have in this video, or would you like to have our opinion on the stocks you hold or plan to add to your portfolio? Please post your comment on the comment section. We will be happy to help you grow your investments. Thank you. Happy investing.